The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Wednesday. Welcome to another edition of Breakout Investing on TFNN. Apparently, I'm having some problems putting my chart up, as I always do, in the Tiger's Den. Bear with me as I try to figure that out. You can look at charts live right along with me, normally with Tiger TV, right on the homepage of TFNN.com. Channel 1, the show is carried live, and it is archived on Channel 13. So doing things that I normally do here, but it is not showing for some reason, so we'll try to troubleshoot that as soon as possible. 877-927-6648, that's the number to use if you want to call and talk to me about a fairly significant downdraft in the market today post-election. My show airs every day now on TFNN from 3 to 4 Eastern. If you can't listen live, head over to iTunes. You can get it as a podcast. Feel free to leave a review if you'd like. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. All right, taking a look at the markets here. Let's take a look at the Dow, showing very bearish price action today. The blue chip index undercuts its 200-day simple moving average, longer-term support level here. It is down 281 points, 2.1%, to 12,964. Financials very weak inside the Dow today. Let's take a look at Bank of America. We've been talking about how financials have been hanging in there, showing relative price strength. Sellers in Bank of America today in spades. Very heavy volume behind a 6.4% decline for the stock today. Shares recently trading around $9.31. Also, fairly heavy selling in Dow component JP Morgan Chase, JPM, sitting right at its 50-day moving average. Very heavy volume here as well. Down 5.2% to 40.65. Its 50-day moving average at 40.60. So it is, 5 cents above its 50-day moving average. Another support level for JP Morgan would be its 200-day line at around 38.5. Also in the Dow, American Express, selling, fairly pronounced here as well, down 2.7% to 55.64. So, rough day for the Dow. Let's check in on the S&P 500. We're going to see broad-based selling in all the major averages today. S&P 500 down by about the same percent, 2.1% decline to 1398. Still perched slightly above its 200-day moving average at 1380. And the NASDAQ composite, also in a world of hurt today, it is down 2.3% to, let's see here, 2942. NASDAQ composite for the past 6 days or so has been just kind of sitting just above its 200-day moving average. It takes out the 200-day line with conviction today, so bearish price action in this index as well. Volume-wise, where are we at? Well, yesterday on the NASDAQ, volume slightly above average at 1.74 billion shares. Remember, we had a slight, mild accumulation day in the NASDAQ composite yesterday. Volume today tracking about 15% higher than what we saw Tuesday, so unequivocal distribution. Institutional selling in the tech index today. Same for the NYSE indices. Volume yesterday pretty much average at 668 million shares. We are tracking about 30% higher than that today. So rough day for the market. President Obama gets another 4 years. We also had comments from European Central Bank Chairman Mario Draghi earlier today, basically saying that the European debt crisis was starting to affect Germany. And my initial thought to that was, what, is this news? I mean, we've seen, economic data out of Germany over the past few weeks has come in below expectations. Not really sure what the news is there, but definitely Europe has been out of the headlines for quite some time, and it's been nice not obsessing about the euro debt crisis, but who knows? Maybe that's about to get on the front burner again. We will see. Taking a look at bonds today. Money flowing into bonds in spades. That is knocking the yield on the 10-year note sharply lower. It's down to 1.63%. Yield on the 30-year bond down to 2.82%. U.S. dollar index up, but maybe not by as much as you might think. It is trading at 80.77, up 15 ticks, only a 0.2% gain. We'll check in on the greenback index here. This is as of Tuesday's close, as I always say, but trying to get back above its 200-day moving average at 80.77. It is now slightly above the 200-day line, so we'll see where the U.S. dollar index wants to go from here. Taking a look at gold today, only down $1, $1,714 an ounce. We did get a fairly high-profile earnings report in the gold space before the open today. Randgold Resources, with significant operations in Africa. Gaps below its 50-day moving average. It is trading up near its session high, but still down 6.6%. on the day to 113.43. They had power outages at its Tongon mine in Africa. That hurt earnings, down 3% from a year ago to $1.11 a share. The estimate was for earnings of $1.28, so well below the consensus earnings estimate. Sales also came in below expectations, only up 3% from a year ago to just over $318 million. The consensus estimate was for sales of just over $366 million. So disappointing earnings from Randgold Resources. Taking a look at crude oil here, 84.44 is the official settle for crude oil today, down $4.27. After the close, take a look at a couple of earnings reports from some oil and gas producers, fast-growing oil and gas producers, as a matter of fact. Continental Resources under pressure today, down 3.9% to 73. It reports earnings after the close, 87 cents a share. That would be up 28% from a year ago. Sales up 44% to $610.8 million. Annual earnings expected to be up 21% this year compared to 2011 and 40% in 2013. So Continental Resources growth prospects very bright at this company. Technically not looking all that healthy. Always interesting when you see these fast-growing companies, not only with a consistent track record of earnings and sales growth, but when you look out 1-2 years of full-year earnings estimates, that strong growth is expected to continue, yet technically they are just a mess and can't get out of their own way. And I would put CLR in this boat right now, stuck underneath former support levels. Stock is underperforming broadly today, so we'll see what Continental Resources has to say after the close today. And then the oil refiners have been great performers in the market. Delek U.S. Holdings, that's ticker DK, on the New York Stock Exchange. I'll tell you what, I've seen a lot of damage charts in the market, but Delek isn't one of them. It fell below its 50-day moving average, trying to regain the line here, but still holding fairly close to its 52-week high. It reports earnings after the close today. $1.54 a share would be up 1% from a year ago. Sales down 7% to $2.06 billion. A lot of stocks moving today based because President Obama won another 4 years. Some of the strong performers today, I should say, the hospital stocks as well as Medicare and Medicaid insurers that should see strong business as a result of Obamacare and President Obama's election. Take a look at HCA, making a nice move today, bucking the market trend. HCA up 9.9% today to 33.99. And who else do we have here? Tenet Healthcare, actually, nice little breakout in shares of THC. Tenet Healthcare breaks out over a swing point of 26.96. That would be its intraday high set right here. So nice technical breakout for THC. And what's the other hospital here? Yeah, CYH. Let's take a look at Community Health Systems. After hitting an intraday high of 32.70, enthusiasm has subsided a bit, shall we say. It is still up almost 6% to 30.39, but trading near its session low after early strength. Again, the Medicaid, Medicare insurers doing well today. Centene, CNC, name to take a look at here. Nice technical breakout for Centene over 42.46. This is actually a pretty symmetrical, good, solid technical breakout from a consolidation area. So good technical strength shown by Centene today, up 9.6% to 43.71. Other insurers, WellCare Health Plans, WCG. Take a look at WCG. It's outperforming today, but much different looking chart than Centene. WellCare Group way off its high. Damaged goods, in my opinion here, but up 3.7% to 49.57. And finally, Molina Healthcare, MOH. This is another insurer. It is up 3.3% to 27.49. Stocks very weak today because of Obama being elected. Managed care firms, Humana, United Health, WellPoint, WLP, all weak. I think WellPoint also had earnings today, but all three of those stocks under a lot of pressure. Coal and defense stocks also weak. Take a look at coal stocks. What were some of the coal stocks here? We had BTU. Good example, PBD Energy taking a hit, gapping down 9.5% today to 26.28, and Consol Energy, another name, CNX, under a lot of pressure today, down 6.1% to 33.29. Medical device makers taking a hit because Obamacare is alive and well because of the election results. Shares of Medtronic, MDT, STJ, St. Jude, Boston Scientific, and even Intuitive Surgical, which actually had been showing technical strength ahead of the election. ISRG down, not too bad, off its session low, but down 1.2% to 537.50. A lot of these medical device makers are going to get their profits taxed. That is one part of Obamacare that could negatively affect earnings going forward for the medical device makers. All right, folks, thanks very much for tuning in. As always, headed into break number 1 here. You're listening to Breakout Investing on TFNN. A lot more to get to. We'll be back in about 3 to 4 minutes. Sit tight.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. I've been asked more than a couple times today, what do you think about the heavy volume selling and the major averages today? Is it overdone, or what were you expecting the market to do if Romney won or if Obama won? And my short answer to that is I really didn't have any idea how the market was going to respond to the election results. I guess I could say I'm a little surprised at the magnitude of the selling, but again, today's volatile markets, when the high frequency traders and the hedge funds and all the the electronic nature of the market, when that starts working, you can get very significant percentage declines that are pretty scary. So on the one hand, nothing is surprising here, because this is a market that has been under distribution since late September. There were really no signs of an uptrend taking shape. A lot of technical damage has been done to market-leading growth stocks. So in that sense, it's really kind of progressing just like it has decade after decade. When you get these market pullbacks and signs of institutional selling in the market, your leaders start to face selling pressure. Some roll over. They're not going to be leaders again. But the silver lining here is that at some point this selling is going to run its course, and a new uptrend is going to resume. It may be a tradable rally, or it could be something more. So a lot of people, when they're losing money, they tend to stop looking at statements. They tend to stop looking at the market. But you really should be paying attention right now, because the silver lining again is that new leadership is eventually going to emerge, and that is, an important thing to keep in mind here. So on the one hand, was I expecting the Dow to be down 270 points with 35 minutes left to go in Thursday's session? No, but it is, and it's a market that's been under distribution for a while, and we're seeing more distribution today. So tells me that the recent pullback is probably going to need a little more time to sort out. New leadership is going to take a little more time to set up, and that's fine. For my Ultimate Growth Stocks newsletter and model portfolio, I am in a big cash position right now, so I'm not really getting hurt in this market, and frankly, I don't get hurt that often because I use stops and I know where I'm going to sell a stock even before I buy it. So I have 2 names in the model portfolio right now. I've been taking profits in some names, keeping losses small in others, but we'll definitely live to see another day, and we'll be prepared when a new uptrend starts. So I'm out of the market's way here. Following rules in a market environment like this is critical. A lot of investors don't use rules. They invest, based on what they think should happen, and when you don't follow rules, you can get really hurt in a market environment like this. So strict set of buy rules I use for the Ultimate Growth Stocks model portfolio. I use a strict sell discipline as well, and you always hear me refer to myself as a top-down investor, and it's good to be a top-down investor in a market environment like this, because price and volume in the major averages have a big say in how aggressively I'm invested in the market. And in a distribution phase like this, I am not invested. I am sitting in cash and just waiting for a new buy signal. All right, I mentioned the coal stocks getting hit hard. Alliance Resource Partners, ARLP, Walter Energy. Let's check in on WLT. At last check, that was having a rough day. Walter Industries down 9% to 33.95. So the coal stocks getting hit hard today on the Obama re-election, and also defense names hit hard as well. You've got L3 Communications. This is ticker LLL. Big wild day of trading in L3 Communications after 5 straight gains. Interesting price action, almost like trading as if Romney was going to get elected, but after 5 straight gains for L3, it is down 3.4% today to 74.83. Comes down to its 50-day moving average, now trading in the middle half of its trading range today. Lockheed Martin, LMT, another defense name under pressure today. It takes out its 50-day moving average with volume. Bearish price action down 3.8% to 91.28. Northrop Grumman, NOC. You can see takes out its 50-day moving average as well. And finally, Raytheon, RTN, hits an intraday low of 54.30, trading up near its session high, but still down 2.7% on the day to 55.77. At one point, there are going to be some good setups to talk about, emerging leadership to talk about. We still got earnings to go through. We've got earnings reports after the close, a whole bunch of stuff to get to on the program today. But as the market health continues to improve here, new setups are going to take shape, new leadership is going to take shape. That's when it's going to get exciting. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Quick check on the markets. About 25 minutes left to go in Wednesday's session. We've got the Dow still down 250 points, 1.9% to 12,995. NASDAQ Composite down 62 points, a little more than 2% to 2950. And the S&P 500 down 27 points, 1.9% to 1401. Trying to hold on to that 1400 level. You know, what's really amazing is that even with the selling that we're seeing in the market today, the NASDAQ Composite is only about 7 to 8% off its recent high of 3197. It's generally regarded, you get a 10% pullback in the major averages. That's what's called sort of an intermediate term correction. And then when you get a really big pullback, kind of bear market territory, is 20% or more. So we haven't even reached that cusp of an intermediate term correction here. NASDAQ Composite only about 7 to 8% off its recent high. S&P 500 only about 5% off its recent high. So the selling certainly feels a lot worse than it's been when you look at how far the indices have come off their recent highs. But it is a bearish environment out there. It is very difficult to make money in stocks when the market tide is flowing so decidedly negative. So as I mentioned in the last segment or the segment before, a buy signal will come at some point. Sometimes buy signals, they present these nice tradable rallies. It lasts maybe 3 to 4 weeks. If the market rallies 5, 6, 7%, sometimes you can get in names that are going to give you a quick 10, 15, 20% returns. But if it's meaningful, if it's a meaningful follow-through day, a meaningful buy signal that really conveys strength and conviction, sometimes these rallies can last a little bit longer. My goal when I buy a stock or initiate a position in the Ultimate Growth Stocks model portfolio is not to flip it a week later or 2 weeks later. I like to buy it at the right time and hold on to it for a long-term gain, and that has been difficult. There's no doubt about it. Especially this year, it's been just a kind of a volatile whipsaw market where it's hard to hold on to positions for any length of time. Hopefully that's going to change in the future, because excessive trading can be very dilutive to performance. But if you're in a growth name and you see it down 5% in one day, breaking support, I know that chances are you're better off getting out of that stock, because if you don't, man, that loss can add up pretty quickly. So we will see. All right, let's take a look at some earnings reports today. I was confident that Rackspace System was going to deliver pretty good numbers after the close yesterday. It was an okay quarter. I mean, it wasn't a great quarter. It was just an okay quarter. And here you're talking about a stock that has a very, very high valuation in the market. 94 times trailing earnings, 57 times forward earnings. Yeah, I mean, growth prospects are huge at Rackspace. It's supposed to grow annual earnings by 40% over the next couple of years. So it should get a high multiple. But when you're a fast-growing name like this and you basically report earnings that are in line, that's kind of a tough sell to Mr. Market. So shares of Rackspace down 4.7% today to 62.96. There are a lot worse growth stock charts out there than Rackspace Hosting. So even though it is below its 50-day moving average, still not that far from its high. But this one looks to me like it's ready to base and consolidate gains for a while. I think I read that about 25% of its revenue came from cloud products, and the other 75% of its revenue came from web hosting services. So web hosting services still make up the lion's share of revenue for Racks. Mentioned Middleby. I was on Tom's show yesterday. Middleby is a maker of cooking equipment for institutional kitchens, restaurants, and the like. Interesting day for Middleby. It came right down to its 50-day moving average at 118.82. It has bounced nicely. Stock is up 4% today. Imagine that on a down day for the market. Up 4% to 125.24. Earnings at Middleby not too bad. They made $1.60 a share. That was 7 cents above the consensus estimate. Up 23% from a year ago. Sales came in a couple $1 million ahead of estimates. $257.7 million was an 18% increase from a year ago. So investors weren't really sure what to make of earnings early in the session, but it has bounced nicely and is trading up near its session high. News wasn't so good at Perrigo, PRGO. This is a generic drug maker. Really just not a great earnings report from this company. It had been just kind of sitting right at its 50-day moving average ahead of earnings. Stock is down close to 5% today to 109.95. It broke below its 200-day moving average, but is now trading back above that support level in the upper half of its trading range for sure, but big earnings miss at Perrigo. They made $1.27. Actually, it wasn't an earnings miss. The sales were a disappointment. Earnings actually beat estimates by 3 cents, up 15% from a year ago. Sales were up 6% to $770 million. The consensus estimate was for sales of $826 million. So big revenue miss for Perrigo, and the stock is suffering as a result. Department store operator Macy's also reported earnings. Outside day looks like taking shape here. Macy's had also been showing relative price strength ahead of earnings after hitting an intraday high of $41.98. It is now down 0.7% to 40.72, trading near its session low after early strength. They beat the consensus estimate by 6 cents with profit of 36 cents a share. That was up 13% from the year-ago quarter. Sales pretty much in line, up 4% to $6.08 billion. Another sell-off today, or another stock selling off today, I should say, a name that there hadn't been any sellers at all in Agrium ahead of earnings, but man, is this thing getting hit hard today, down 10.5% to 95.85. Disappointing results here. They missed the consensus estimate by a wide margin. Analysts were looking for $1.84. Earnings were $1.34 at Agrium. This is a fertilizer company that was down 18% from a year ago. Sales down 6% to $2.96 billion, also slightly below the consensus estimate. Now, let's check in on shares of SodaStream, because I mentioned on yesterday's show, yeah, this is a very speculative stock, but one thing you can't take away from SodaStream is that they continue to deliver solid growth quarter after quarter after quarter after quarter. I mean, there are really hardly any missteps at all. Now, you wouldn't know it by the chart because it's just been in a downtrend and one of these stocks that just can't get out of its own way. But it is up 4.9% today to $35.83. You know, you can go to the store and buy these soda makers. You can make your own cola, root beer, orange soda, lemon lime, whatever you want to make. But they make the SodaStream soda maker, and their earnings reports were really solid. Earnings up 58% to 87 cents a share. That was 15 cents above the consensus estimate. Sales up 49% to $112.5 million. That was about 8 or 9 million above the consensus estimate. So props to SodaStream for another strong quarter. I am not a buyer of the stock here. This is one that kind of trades all over the place. You can see a lot of erratic, wild intraday price swings. I know that's sort of commonplace these days in these volatile markets, but you know, the tighter the trading in a stock, the better. SodaStream remains in a downtrend. It's also prone to volatility due to its speculative nature. So I'll take a pass, but appreciate the strong growth that the company has been able to consistently deliver. Mentioned some of these stocks benefiting due to President Obama's election. You can't not talk about the gun makers. Sturm Ruger having a good day today. Gaps up back above its 50-day moving average, up 7% to 47.76, and also Smith & Wesson SWHC up near its session high, up 10.4% to $10.44. Thinking here is that with Obama serving another 4 years, possibility of stricter, tighter gun laws, people going out and buying guns, stocking up, so to speak, if it's going to happen. So Sturm Ruger and Smith & Wesson having good days. And also, at last check, American Tower. This is a real estate investment trust, outperforming today, up 2.5% to 75.58. Good technical setup here. This is very, one of the rare charts in this market. A lot of broken charts, a lot of stocks marred by consistent bouts of institutional selling, but not American Tower. Apparently, this company is nearing an agreement to buy some German mobile phone towers from Dutch phone company Royal KBN. So that stock is outperforming today. Regeneron Pharmaceuticals. I've had some growth names in the ultimate growth in my model portfolio where I look back and I just am so thankful that I sold them when I did, because if I didn't, I talked earlier in the show about just kind of, watching, this common pitfall of watching a small loss get bigger and bigger and bigger, and then you're in that terrible situation of holding and hoping the stock comes back up. But when I first started to see signs of selling in Regeneron, and I wasn't real keen on how the broad market was acting, I took profits on October 23rd. It was basically right one of these 2 days right here. But I remember selling it at 154. It's at $139 right now, down 3.6%, but definitely was able to preserve capital in this name and actually lock in some profits here. The $128 price level could be a a good support level for Regeneron, but I'm going to get out of this one's way for now. I'm certainly not going to, step into the stock here and say that the selling is over and it's only a matter of time before it bounces, or it's only a matter of time before it finds support at its 200-day moving average. Its trend is downward for now, just like the market. So I'll wait for a buy signal before nibbling, if I ever decide to nibble again. In the same group here, Jazz Pharmaceuticals tried to hold on to its 50-day moving average. It fell below the line today ahead of its earnings report on Thursday after the close. Fast-growing name here. Looks like it's ready to base, but still a very risky stock in this type of market environment. Jazz down 1% today, holding up better than the broad market to 52.94, trading up near its session high. Wouldn't be surprised to see very, very strong numbers from this company tomorrow after the close. Their key drug is Xyrem, which is a narcolepsy drug. So they're expected to report profit of $1.32. That would be up 40% from a year ago. Triple-digit sales growth, up 145% to $179.6 million. So we'll see what Jazz has to say after the close on Thursday. All right, a few words about Ultimate Growth Stocks, how I've been navigating this market, folks. First of all, if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. In the breaking news section, you'll see some text links there in red letters. Try Ultimate Growth Stocks. You can get a 30-day free trial to see how I've been navigating this market. I think one of my main goals as a newsletter writer is not only to help people maximize profits during market uptrends, but also to protect capital during downtrends. I'm hardly in the market at all here. If you're a growth investor and you're heavily invested in this market, or if you're just any type of investor and you're heavily invested, it's a risky situation to be in, no doubt about it. So I feel like I've done a pretty good job of navigating this market. I again started to see early signs of institutional selling, not only in Apple back in late September, early October, but in the broad market as well. And that was a signal for me to just kind of pull back. If I needed to take a 2%, 3%, 4% loss in a stock, I'd rather do that rather than watch a small loss potentially get bigger. And I just showed you Regeneron Pharmaceuticals as a good example. Apple was another name that I sold back in late September, early October, probably 100 points ago. So sometimes it's just as gratifying selling a stock at the right time as it is buying at the right time. So when the market tide starts to shift again, when selling starts to become exhausted, you get a little rally attempt, then you get a big follow-through day or confirmation of a new uptrend, that's going to be a sign to start nibbling again. So between now and when that happens, I'm going to be sending out updates and alerts and just talking about stocks that are setting up. It's pretty light supply right now. There's really not too many charts out there that have my interest, especially after a day of selling like today. But the market will improve at some point, and we will get a buy signal. It may be a tradable rally. It could be something more, but there will be profit opportunities at some point. Just right now, it doesn't make a whole lot of sense, trying to make money in a downtrending market. All right, headed into the final break. We'll check in on the markets one last time, look at some earnings reports due after the close and before the open tomorrow. We'll do that when we'll get back. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Quick check on the markets here. About 5 minutes left to go in Wednesday's session. The Dow down 261 points, 2% on the day to 12,984. Sitting right at its 200-day moving average here. I mentioned weakness in the financials earlier in the show. Bank of America under a lot of pressure. JP Morgan Chase under a lot of pressure. I've not looked at the XLF, the Financial Select Sector Spider Fund. It finally gave up its 50-day moving average today, but as far as stocks and ETFs out there, I'll tell you what, it had been showing very, very good relative price strength ahead of today's decline, but a lot of sellers in the XLF today. You can see this big red volume bar, very, very heavy selling, probably some institutional selling in the XLF today. I would not look at this like it's on sale here. Could see lower prices for this as well, but Anyway, that's a look at the XLF. It is amazing, though, to see these home builders still hanging in there. The ITB, this is the iShares Dow Jones U.S. Home Construction Index Fund. Look at this thing, hardly moving at all. Down 5 cents on the day, 0.2% to $20.95. Problem is, it is very extended up here. The last time to buy it was when it broke out over $17 and a half bucks back in August. It has been running higher ever since. Looks extended to me, so just can't get overly excited about the home builders up here. ITB's performance today, very, very impressive. And another name I'm watching here, I think that has the potential to outperform going forward if we get improved market conditions, is ARM Holdings, down 53 cents today, 1.5% to 34.04. Just love the fact how there's just not a lot of volatility in this stock. Kind of an orderly decline today, trading up near its session high, tight intraday trading range. ARM Holdings, chip designer, they license their technology to Apple. Its chip designs are found in the iPhone and the iPad, so very interesting company. After the close today, let's take a look at Whole Foods Market. Whole Foods Market back below its 50-day moving average ahead of earnings, down 1.4% today to 96.62. This is a stock that is up, close to 600%, I think, since the start of the bull market back in March 2009. Take a look at a weekly chart for Whole Foods, and this one just looks vulnerable to me. It's in a late stage base, has a lot of big money already been made. I think that's a pretty good argument, but no one would be surprised to see another strong quarter from Whole Food, because they have the tendency to knock the ball out of the park when they report earnings. They obviously organic food, natural food grocery store. Earnings expected to be up 43% from a year ago to 60 cents a share. Sales up 24% to $2.9 billion. But not up quite 600%, but some 300-400% move over the past 3.5 years or so. So Whole Foods Market's earnings after the close today. And don't forget about the competitor, the Fresh Market. Not quite the same kind of store as Fresh Market, but still caters to upscale clientele. This is in an interesting setup here. Not too many sellers in the Fresh Market at all today, down 17 cents to 61. Earnings from the Fresh Market will be out later in the month, November 28th, but this is another well-run, upscale specialty grocer that is still in the early stages of growth. After the close today, also Monster Beverage. Boys, this one has been hit hard. A lot of price destruction in Monster Beverage. Earnings supposed to be pretty good. 55 cents a share, up 25% from a year ago. Sales up 22% to $578.5 million, but a lot of concerns about the health effects of these highly caffeinated drinks. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in, folks. I'll be back tomorrow, 3 o'clock Eastern, with another edition of Breakout Investing. Have a great afternoon.